I made a number of videos on the situation at Vauld and going through all that, right? Going through chats, especially on the Vauld Telegram group. It is extremely painful to see people really cry out for help, asking for their funds to be returned. However, this is the peril of the centralized system in crypto. Now, what I fear is that Volt might just be the beginning. There are centralized crypto exchanges which could be the next. And I'm particularly focusing on the Indian crypto exchanges because I feel that the Indian crypto exchanges are under a lot of strain for a number of factors. Right now, to begin with, there is a lot of raids going on against all these crypto exchanges. The enforcement directorate, believes that approximately 130 million could have been laundered through these crypto exchanges, and hence they have given them notices. They are under a lot of strain. They are raiding them. In some cases, they are freezing their assets. We saw Volt's assets itself being frozen. That is just the beginning or the tip of the iceberg. Now, what is the broader aspect here? The broader aspect here is that, like Volt, if things go bad, then you might be locked out of your funds. There could be a bank run. Suddenly, customers might panic and start pulling out their money, leading to the company itself freezing withdrawals, and then you would be stuck holding on and waiting and waiting and waiting till your funds are returned to you. And there is enough reasons why that could actually happen. Now, ED notices have gone out even to large crypto exchanges in India like Coindcx, like Coindcx. We already saw the industry being battered by the fact that the Indian government imposed TDS on all transactions. Now, what does this mean? TDS means that tax deducted at source. Every time there is a trade, there is a 1% deduction at the source itself. Now, for traders, this is not really a good idea because traders trade multiple times in a day. If you're a long-term investor, then you might buy today. 1% doesn't matter to you. You're holding on for like 2 years, 3 years. But traders are trading multiple times in a day, and for every trade, if they lose 1%, then they're screwed. Right? So on the traders front, most traders are don't want to do this anymore on these exchanges. That's the biggest problem. Now, for the exchanges, most of their revenue actually come from the fees paid by traders because they charge on a per transaction basis, and traders make the most number of transactions. Retail investors who are long-term investors don't really contribute much to a centralized exchange's revenue, and traders are the largest chunk in terms of revenue contribution. And this particular move has impacted traders. Most of the Indian exchanges have seen a drop in volumes. If you just look at the volume drop, roughly 44% at least is the drop that has happened. We saw WazirX volume drop by 40%, Coindcx by like 52% or close to 53%. In fact, these numbers could be much higher because trading volumes are much higher. This data might first of all is old and it might not be exactly accurate, but one thing for sure is that trading volumes have definitely been impacted. So what are these crypto exchanges doing? Now, all these crypto exchanges, they're planning something for the long term, because all these guys, they raised boatloads of money, right? If you look at this Indian crypto exchange Coindcx, they are now valued over $2 billion, and they raised about $135 million just in April of this year. This is the big problem because raising money is just one part of it. Now you need to deploy that money. So when you raised money, you had some assumption that the market was going to grow this much. This is the status quo. This is what's happening. But I think most exchanges or most venture capitalists also might not have totally incorporated regulatory risk, and this is the big regulatory risk that has hit all these exchanges now. All of them have raised money, so they might be cash rich, but they are staring at a bleak future because all these investors are going to pile on pressure on them, because eventually investors want a return on their money. A VC fund that is invested in any of these crypto exchanges want returns on their money, and if they have given them so much money, they want to see some action. So what are these guys doing? If you look at all these companies, they are trying to introduce new products, right? Apart from their core trading and buying of products, they're trying to introduce some new products to ensure that the revenue keeps growing. Right? I think one recent company, I believe it was WazirX or Coindcx. They said that they're going to pivot into a completely a wealth tech kind of a model, and crypto being the leading part of it. Coindcx is trying to create yield products for the customers. So that's something that Coindcx is trying to do. Very recently, I think just last week, they introduced something called Octo. What is Octo? Octo is, what they're saying is a part of DeFi. They're trying to allow you to access thousands of tokens across multiple decentralized exchanges, and also discover high yielding opportunities at just the click of a button, right? This is what they're trying to do. But the big problem is, all this might sound great, right? The product roadmap, all this is great, right? It's on paper, all this is great, but is it really worth it? Because something like a 1inch has been doing this forever. Why would I go to an unknown exchange, or as a global customer, I mean, why would I go to an unknown exchange, or even as an Indian customer, why would I go to an exchange rather than going to a decentralized place, right? Because everybody has seen what's happening. Everybody knows the threat of a centralized player in the crypto space. And I feel this is the biggest pressure. All these crypto exchanges might face a huge bank run because their business metrics are under huge pressure, and they're facing regulatory scrutiny. Two sides, they're just getting squished by both these ends, and players like Coindcx trying to introduce all these new products, I don't think it's going to work, right? This is because there are enough decentralized players who do exactly the same thing. In fact, they've been doing it for so long. Look at 1inch, right? They have 279 liquidity sources, more than $236 billion in revenue, more than 3.3 million wallets, more than 21 million trades. Would you trust a 1inch, or would you trust a very new product, right? I would definitely trust a 1inch. So all these things that most of these crypto exchanges are trying to do are just gimmicks for their investors, most likely. And I would strongly recommend any of you holding your cryptos in an Indian exchange to move it out. I have done this. In fact, I have used crypto exchanges that don't even exist today. Many of them closed down years ago, so I had always moved out all of my cryptos into private wallets, and I think that's the best way for you to secure it. Because if a bank run does happen and your funds are frozen, then you're screwed, right? You can like all the users of Vauld, you don't know when you'll get it back, so be careful of that. And over and above all these regulatory and business model problems, there are spats like this that are happening, right? Binance and WazirX are fighting over who actually owns it, right? WazirX is telling Binance that no, you own it, and WazirX and Binance is saying that no, we don't own it. Right? So the Binance CEO is saying that acquisition was never completed and Binance only offered technical support. But the founder of WazirX is saying Binance acquired WazirX and owns the WazirX domain name, held all the WazirX crypto assets and profits, and had the root access to the platform's Amazon Web Services servers. This is really scary. If things like this happen, where people are saying that no, it's not mine, it's yours, and they're moving away from it, as a user, as a user of this crypto exchange, or as a user of any of these crypto exchanges where you have your money parked, you might as well move it out. And I think that's what is going to happen. Most of the crypto exchanges probably might not survive this because they have raised too much funding. They don't know what to do with it. They're trying to introduce new products that may or may not succeed, most likely will not succeed. So in the interest of your own funds, that in the future there might be a bank run on many of these exchanges, I would strongly recommend you to withdraw your funds into a private wallet and keep it safe. In fact, if you want to continue trading, or if you want to invest and all that, try to use Binance, because I think there's nothing more secure than Binance, right? Try to use Binance, stay away from all this, keep your funds safe, do your own research, and if you like this video, subscribe to the channel, tell your friends about it. Welcome to the Wave Crypto Club.